Hello guys, glad to have you on board again. Today we're going to make a quick focus. It's going to be the third one, so it's a strategy tutorial today, especially focused on pro framework indicator, the one you're still struggling to get the benefits out of. So I'm just doing what I can to help you getting the best out of this one. So I've been identifying a couple problems that you guys are facing using this indicator, so I'm just clearing things out in here, no more no less. It's just to help you guys taking advantage of this stuff instead of getting into complex problematic doubts and everything like that. It's just that doubt is never going to be good for you, and you should do anything you can to just try getting the hell out of those kind of troubles. So anyway, this is going to be the topic about today. I've been highlighting you guys having struggle identifying context, even though in my perspective, this is the easiest tool ever to do this. But apparently it still isn't. I'm part of that problem, and I'm going to set things really straight in here. I'm going to change a few things, so we're going to start with a quick introduction in here about what is going to change regarding the way I'm communicating with you guys, because I think I've been influencing you in the mistakes you've been doing. For some of you, some of you guys are just doing really great, but some are still struggling, and those are the ones I care about. I want everyone to do great, not just a few. So, troubles identifying the context. How does this show up? Generally, it's always the same mistake, because most of you guys are trying to copy me, and the way you can do that is by watching the daily updates and videos, and you're trying to do the same thing as I do, even though I try to be clear on that, and apparently not enough. You shouldn't try to copy me. You should try to get inspiration from me. So to me, the daily shows I'm doing are not meant to be educational content to learn the indicators, more likely showing you the way I personally do use them, the way you should inspire from, not just trying to copy. But apparently, some of you just don't get that. It's no problem. I shouldn't have led you to this problem in the first place. So I'm going to change that. To me, I was doing those videos with one purpose. I was searching to share with you my daily work, my daily day job, day by day, without filters, without making things easier for you to understand. I tried to do it as hard as it is, as brutal as it is, but at some point I think it's too complex for you guys, because I'm showing you the shaded grays, how I get to manage my risk with precision, and it is leading you to troubles because you're trying to do the same, but you don't have the same experience. So facing that, instead of adding something to your learning phase, I'm kind of inducing problems to you, and I'm sorry for that. So I'm going to change this. Starting right now, I'm just going to keep on doing this because some people think there is value in here just showing you the way I'm working. So I'm going to keep on doing that. It's not radical change, but I'm only going to do that on Mondays and Fridays. I'm going to cover up my weekly trades, and all the rest is going to be, so Tuesday, Wednesday, and Thursday, we're going to do only educational content focused trades, which means we're going to change. I'm not going to make cover up of the trades I'll be taking in swing trades or whatever, because this is confusing you. So Monday, Friday, my scenarios, the way I trade. Tuesday, Wednesday, Friday, Thursday, the way you should trade. So I'm going to put myself into your own skin and the way you should learn the indicators, okay? It's going to be a little bit different, but I think it's for the better. So that's just for the core changes about the way I'm going to talk to you. Anyway, the goal of that video is not necessarily just that. That was just an introduction. But today we're going to dig a little deeper into identifying context, because this is where you guys are struggling. And as I said, I'm part of the problem, because when I do make my daily shows, I tend to talk a lot more about the signals, the trading signals I do use, which actually shouldn't be the focus. I should be focusing on identifying the context, because this is where you guys are having the biggest amount of troubles. Identifying those contexts to actually search for signals into. Because the signal, I thought you would get that point, but you actually don't, and that's understandable. You're still thinking that the signal is what makes the difference, that the quality signals provided by those indicators will give you good trades. It's absolutely not, because if you don't trade in context, you're going to be out of trading. It's not trading, it remains a betting, still with a much better risk management than just a single bet out of gut trading, because the indicators will at least limit the risk. But if you're trading out of context, most of those signals just are, they don't mean anything to me. Obviously every signal that happens in there, in there, in there is nothing you should get to be concerned about. Those signals are just patterns that triggers, but triggers on uninteresting prices area. There are some prices area in which you will trade those signals. And I think this is step 1 of the strategy, but most of you guys are heading straight forward to step 3. And that's the biggest mistake you could make, because the strategy only works if you filter the signals by step 1. Back then, you were struggling at identifying context, so I created that framework indicator to help you that way. But right now, instead of getting to focus on learning how to identify the context, you're still focused on trying to figuring out what the hell are the signals, which is absolutely not the point. Understanding my signal is nothing you should give a shit about. This is why I have those indicators. You shouldn't focus on what those signals are, what the taking profit pattern is, what the divergent pattern is. It's just a pattern. It's there to help you get going and getting a green light, meaning that you can trade. You can trigger the trade when that pattern triggers in an interesting price area. And obviously the divergence pattern will have a different money management than the exit patterns. It's just you have gradients. I told about that on the previous video, which is framework number 2, risk management. On this one, we're not going to focus about that. We're just going to focus on really framework itself and how to highlight price area that matters. Because in those areas, all the signals that will get into you will matters. All other signals you shouldn't even give a shit about, all right? Anything that happens in between is just noise that you must avoid. So first thing first, if you're struggling with context identifying, I already gave you tips. Use alerts instead of watching closely for the prices each and every time when prices don't matter, and generally 90% of the time prices don't matter. Which means 90% of your time when you're watching a chart, the answer is just wait for something reliable to play. All right? Pure and simple. To face that uncertainty, just fucking use alerts. There is no other choices. I already told you and showed you how to use those alerts with frameworks, so I'm not going to cover this again. Today is just going to be what are the contexts and what are the technicals you want to see to be sure that you're trading interesting prices of those contexts. All right, so we're going to sum up core informations again. All right, what are the core contexts? All right, let me just, in order to avoid having glitches, I'm just going to switch back to a single chart setup. All right, okay, so, all right, first thing first, contexts. So, you know there are different contexts. I'm going to stick to the essentials in here, so I'm not going to detail all the available contexts. I'm just going to show you those you'll be coming across the more often. So, all right, let's say no border for those ones, and switch to turn 28. So first context is obviously going to be range. Okay, you should already know about that, so I'm going to go quickly in there. Okay, so you got range, you got trend, and you'll see there are gradients on all of them. Okay, still remember that there are others. I'm going to set other emotional markets, We're not going to cover these ones, okay? We're not going to make emotional patterns detection in here or trading. When you see emotional markets, so anything like bubble, catalyzed market, all those things, you just don't trade them for now. You're going to focus on what you can trade easily and simply, ranges and trends, and this will cover up 99% of assets. Okay, so obviously there are still lots of emotional markets, so some catalyzed market, some distorted market, some bubbles and crashes, and obviously these are the ones that gathers the attention. So some of the big names are trading emotional for that reason, but most of other assets are trading ranges and trends, pure and simply. So we're going to focus on those two, because this is not just black or red, it's not just range or trend, we're going to have subcategories. First subcategory out of range, okay, it means, actually consider this as a process of decision making. Whenever you get to context, it's going to be two layers. First layer is what the big topic is. Are you trading emotional? Get the fuck out of here, okay? You don't trade those assets for now. I'm going to make a specific video on them later to help you trading emotional contents, because we're going to use technicals, but not just technicals in them. But in ranges and trend, yes, we will use the technicals to highlight interesting prices area. So first answer to the question is range or trend. It's a binary choice, and this one you don't trade. Second question, when you're in the range, the second question you might ask is what is the maturity of that thing? How mature is that range, okay? So how mature? Okay? So obviously I'm not gonna making subcategories of ranges, okay? So what structure is the first question you should ask yourself. What is the price structure? Is it ranging? Is it trending? It's a pure binary choice. Obviously, there are gradients in here. You're going to have bullish ranges, bearish ranges. We're going to make those things. We're going to have bullish trends, bearish trends. You got different structures of trends. Most generally, the trends will generally be wave 3 extended, which means in a 5-wave structure, the wave 3 is generally the one that is trending because it's the most obvious to trend. I'll show you why. But in some cases, like commodities, you're going to have wave 5 extended. So it's not just one rule that will work, because the market isn't meant to be that way. Every market will have different rules. But if you do trade conventional market, let's talk SPX, okay? If you're trading this liquid index, stock index, major thing, if you do trade SPX, obviously you're always going to trend wave 3 extended, or most likely you will be, okay? So we're going to use the ground rules in here. I'm not going to dig into details, I'm just going to set the basics. But you need to make sure that with time you're going to get into learning the shaded grays, add some rules to get more specific at triggering the context and identifying the prices area. All right? So in ranges, either bullish range, bearish range, whatever this is, you're always going to trade at least in context or above, because in ranges, you will clearly identify ranges. So let me just switch to something that is currently ranging. We've got euro-dollar is ranging on short-term scenarios right now, and we might be trying to trend today. Yes, we're trying to trend. So let's switch to shorter-term time frames. Let's say, for example, 2-hour charts. Yes, not yet. No, we should even go lower than that to see a clean range context. There we have a ranging context. All right. How do you define range context? When you have them on the screen, it's basically not moving. You're at the same price at the beginning and the end. Okay. What is the second technical you should see? Okay. You just delete the price if you're facing problems with them. If price is disturbing you, you should just hide them. To hide the prices, if you have my template, you just switch to hello candles, and this will just basically delete the prices. Oh, God damn it, TradingView, what the fuck are you doing? Shitheads. All right. Okay. So, oh, come on. All right. So, ranges really look like that. Sideways action, the trend channel never really managed to get to set themselves and break through the trend channels, to the context channels. So we have sub-trends generally moving in two waves, 1, 2, facing failure on the context and moving again, okay? But we're always having, anytime the trend is trying to break the context, it's failing and reversing, okay? Trend channel goes out, prices try to extract, failing. Prices try to get out, try to extract, failing. At some point, we're going to trend, all right? When you see trends, you always see something different, okay? This pretty much looks like a trending market getting out of a range. To confirm that, we're going to need to have this box being unfolding the previous one, meaning the next box must be there and unfolding this one, okay? Just as we've done in here, we're trying to break in here, okay? Sometimes you'll have unfolded boxes, but that's it. The market will try to trend, some bearish signals, failing and reversing. This is clearly sign of a range. The market will just reject anytime it will try to break through. It's just ranges of failed trending attempt, multiple trend failing attempt. The market is not yet ready to trend, so it's reversing anytime it's trying to. And whoever is trying to trend is going to be reversed and fucked up. Why? You should trade trend specifically. You're not trading them the way you trade trends. For that reason, because otherwise you're going to get caught into wrong footing scenarios all the time. All right? Let me just put the prices back in the game. All right. So in here, clearly there is a range. What are the price areas you trade in ranges? The minimum you trade is when prices are trading in the context. Okay. So in the range strategy, minimum price is when you reach into ranges, into context. Anything that happens in between, so all this shit is uninteresting prices. Basically, in here, probably 99% of candles, not to say even more than that, were uninteresting. The only prices that mattered was in here, those 2 candles in there, those 3 candles in there, and all this. Okay, and when you do range trades, you're trying to get the best possible prices, which means this acceptable only if you have very strong signals, exits, divergences, or things like that. Otherwise, generally, the market will try to break through, which means this is where you got very interesting prices inside the range, or to trade a range reversal in here as well. So those areas specifically, any bearish signal that happens in there, you take them. Take them, large stop loss, and you're triggering a reversal. You're still trading the same thing. Take profit number 1 on 61% retracement, taking profit number 2 on 76.4. That's how you do trade ranges. Pure and simple. You don't overthink things, but remember about the question number 1. This is range context, but there is an underlying question. What is the maturity of that range? Because there is going to be rules, okay? In here we're going to zoom out to the 2-hour chart time frame, sorry, the 4-hour, just to see what this is about. Okay, so we shouldn't even doing that. We should be doing 1 hour's context and be 8 hours. Yes. No. What the hell am I talking about? Just give me a second. So yes, these are the time frames. So you see how this works. It's basically a layer of time frames. So when we are trading on 1 hour, it's going to be in here. So context is this, and it's 2 days. Okay, so that's why I wasn't able to see this. I'm sorry about that. It's 4-hour chart. It's funny. I was reading it pretty fucked up. And we're now 1 hour. We've been highlighting signals in 30 minutes. And by the way, we're just going to stop in here for a few seconds because there is something really, really important I'll tell you in here. This is one of the major mistakes I've been doing as well. I'm going to apologize for this right through this. Okay, the thing is that through my daily videos, as I'm covering many assets, I made a choice to just choose a few time frames to watch for. I've been telling you I'm trading 2 hours daily, weekly, and sometimes 15 minutes, and I'm just watching for those specific time frames and no other. For a simple reason, these are all the assets I'm watching or trading. This is hell of a list, and I cannot cover them into all the available time frames. But to be honest, these are all the time frames you can trade on. Okay, these are all the common time frames: 1 minute, 2 minutes, 5 minutes, 15 minutes, 30 minutes, 1 hour, 2 hour, 4 hour, 8 hours, daily, weekly, monthly, 3 months. These are all the available time frames you have. All you should care about is to trade in context. So anything that has a context to trade is good to go. Now you have all you need in a signal chart. So basically all you can do, if you absolutely want to trade one asset in particular, which I hardly suggest you should do, instead of doing what I do, watching many assets on a few specific time frames, you should do the exact opposite, focusing on a few assets you will follow, but you'll trade them on every available time frame. You're just going to select what time frame is acceptable and which one isn't. You're never ever going to trade 2 consecutive time frames, which means if you're trading a 1 minute scenario, you don't have a look at 2 minute and 5 minute. Are we clear on that? We're very clear, okay? You need to make sure of this. You're never ever going to trade 2 different scenarios on 2 close time frames. You can trade multiple time frames, multiple layers. For example, you can be bullish on 2-hour charts and be bearish on a 2-minute chart. That's possible to me. No problem with that. Okay, but these are 2 different scenarios with 2 different contexts, 2 different targets, 2 different stop loss, 2 different money managements. And yes, you can trade bullish on one time frame and bearish on another. That's not a problem. Just make sure you're not doing this on 2 consecutive time frames. But basically, I'm getting you wrong by doing my daily updates in which I'm covering many assets on just 3 to 4 time frames. I shouldn't be doing that because you're trying to copy me, and this isn't the way you should be doing this when you're trying to learn my strategy. You should focus on a few assets and watching for every time frame of them, searching for one that is giving you price okay signals, that is giving you an interesting price cluster to trade. In here, for example, we're searching for bullish trades in here, or interesting potential price area. But the problem in here is the maturity of that range. Because if we go 4-hour charts, you remember that in here the context of our 30 minutes is going to be in here. So this is what we see, okay? So we're putting the 30-minute chart we've been showing interesting signals in their higher time frame context, which is the 4-hour chart. And what we see in here is that, yes, we have pretty significant odds to go bearish, but this trend is very freaking mature. So now we're going to jump into the second thing. Why and how do you trade trending scenarios? So let me get the fucking rid of this. God damn it. Yes, fuck you. Sorry about the nasty words, but at some point trading is just doing quite some shit recently, and I can't stand that. So, anyway, not one more time. No fucking way. Please get the hell out of this. Why the fuck do we have dots? Alright, in here is okay. I need to figure this fucking thing out because it's really annoying. Anyway, so moving ahead. This purely is trending. How do you highlight trendings? It's always going to look like that. You're always going to have a sharp breakdown on the trend channel. Okay? And on the side of the trend, you're looking at the box that follows the trend. These boxes will be unfolding one to each other. You're going to be breaks between those two. This is clearly signaling wave 3 kind of trending. And first thing you should be setting yourself. So identifying a trend is easy when the trend is already at play, but you can easily see the trend ongoing even when you're replaying. So when you're in context. Okay. So let's use the replay function again. Okay. In here, you're still trading ranges. Okay. Let's wait for the indicator to update. We shouldn't be asking for average daily chart. There's problems of synchronization from trading view when we're asking for intraday data. Oh god damn it. I can't stand this shit. Alright. Please. Oh shit. Alright. So this at some point we were still bullish trending, late bullish trending, and this is probably wave 5 termination. So we're building the range to eventually reverse the trend or keep on going. But in here we were selling, particularly those prices, and you'll see that this is the way we're going to highlight the end of the possible trend for euro dollar. So we were ranging and waiting for a breakout to occur. In here it was just pure range strategy. In here you're trying to buy. So in here is interesting prices to buy. We're trying to highlight cluster, not playing magical. We're just trying to figure out where the prices were interesting to trade. In here there were absolutely tradable. In here possibly but risky. We were in context, but we're waiting for in context at least, below context at best. So we would have waited or traded only great signals in there, only exits or oversold clusters, anything like that is tradable. Any gray signal in here is nothing you should trade, all right? In here, okay. In here we're trying as well. And let's put this thing in play. All right, as you can see, oh, shithead, not working. So in here, you're obviously taking a stop loss. This is not a trend. This is not a range trade. We're breaking through major context. We're clearly trending in here, so you shouldn't have taken that trade. We were very far from ranging in here. It's obviously trending. So if you took that bullish trade, thinking that that range will keep on going, and we'll see later that that range was pretty freaking mature at that point. In here, even if you do take that trade, this is where you're going to take losses. You cannot do any different in here. When you're range trading on a trend, you take a stop loss because the trend is not going to pull back, which means if you don't trigger the stop losses, you're going to suffer huge losses. How to highlight trends? In ranges, prices will try to break, but will fail. The market will rapidly reverse. They'll try to exceed out of the trend channel, stop in here and reverse. This is huge signs of a ranging market. But in here, it doesn't really look like that. It's acceptable in here. This, you obviously freaking take a stop loss in here. If you didn't, you really going to have a problem. We've already been breaking through Fibonacci levels, breaking the range boundaries. Everything suggests we're trending in here. So even if you don't see it that way, in here is a massive stop loss you have to take. You can't let yourself go further than that. All right? Why you shouldn't have taken this? Because that's the answer to the second question you should ask yourself when you're identifying context. Context is two questions. What is the structure of prices? In here we were ranging, so as long as the range is at play, you don't forecast that range to break. You're just letting it go and you're still trying to buy in here to target the next, the other boundary. All right? Why shouldn't you have bought in here? For a simple reason. Question number 2 is what is the maturity of that structure? And this is where you guys having quite some struggles. So I'm going to try to give you actual tips to use to don't make those kinds of mistakes. So in ranges, maturity is pretty damn simple. All right? Anytime you're going to swing in the range, so just count the swings, okay? Market top is in here, so this is wave 5 context. This is first swing in the range, second swing in the range, third swing, fourth, fifth, seventh, eighth, ninth swing. This one failed to break the highs. This one didn't touch the trend channel. This one's breaking through. Freaking hell, if this isn't mature ranging, I don't know what the hell this is. 9 swings in a range when the average is 4 or 5. It's a lot more than that. It's too much of a range. It's clearly mature ranging in here, so this clearly is a trend breakout. And if you didn't figure it out, this should have gave you a clue. How to figure out when the market is getting out of ranges and getting into trending it means that at some point we're breaking strongly both the context channel and the trend channel. Both are breaking down with huge blocks. We're breaking down, not slowly, we're straightly breaking down. And the last time we made the swing, we didn't reach out to the trend channels market. Okay, so in here it means the bulls are failing, they're losing strength to the bears, and there the bears are taking it over. So in here is range breakout, is trend triggering. So wave 1 is the hardest thing to highlight for traders, because wave 1 is ranging, looking like it's the range that goes from wave 5 to wave 1, and it always looked like that. A range, nasty range that all the trend traders don't like, because they don't know what to trade with this. They don't know if we're going to trend bullish or trend bearish afterwards. Neither do I. But I know that at some point in here I have to reverse bearish, because this was wave 4 and we're failing, and we're now deteriorating the bullish trend and creating bearish reversals in here. But at that stage, you're still not sure. You're still not 100% sure that this is not going to be a range breakout. In here, I will definitely have tried to buy, but only if I had signals, and those signals had to be strong. But in here, even though this trend was pretty damn mature, this range, sorry, we could very well have done this. It wouldn't have been surprising anyway. So if you take that range trade, no problem. Actually, what is the problem? Obviously, you're going to take losses. Do you really think you're going to gain every time? It's not going to work like that. At some point, you're going to make stupid decisions. You're going to range trade trend triggers. So how do you avoid that? First thing first, more than 7 swings in a range, you get the fuck out of here. You don't try the range scenario again. You're trying trend trades. So you're trying to trade the breakouts instead. All right? This is how you do. You're not applying the range strategy after 7 swings. It's going to be rare. Ranges like that, very rare. We have the same thing ongoing right now with the AUDNZD. Most of the ranges would just be few swings like that and trend reversing. It's going to be easy normally, way easier than that. So I'm taking different and hard context to figure out. But in here, mature ranging, suggesting you should have taken that trade, or with very low risk managements. The longer you your range trade, the lower should be your the lower should be your price positions. Sorry, God damn it. The lower should be your price exposition, your position sizing. Yes, sorry about that. That's the word I was seeking for. All right. So range trading, more than 7 swings, you no longer trade, or you trade that with very low leverage, because at some point it's a 50-50 odd. Either you're going to be taking the swing that will trigger the trend, or you're going to suffer the trend. That's simple as that. So 50-50% odds, you're still trading a 1-to-1 risk-reward ratio. If you want to do it, you can, but obviously you're going to have to lower the leverage to the minimum, or even searching for other assets to trade. With less mature ranging, or more than that, trends, which is the best to trade. So when you're breaking down, you're triggering trends wave 3, which means in here, if you didn't take the speculative trades, you can know that at that stage, you know this is trending. So you're searching for a price structure. You clearly have wave 1, wave 2, and this is wave 3. And generally, this is wave 3 that tends to break through the trend channel. Okay, so I would say we're wave 3 in here, still has 4 and 5 to go. All right, so normally wave 2 has to be the highest. So if the damn freaking trading view will stop freezing, we'll be good. And we're paying for this, god damn it. So wave 2 is in here at the previous market top. So wave 1, wave 2, we're wave 3 going with a sub wave 1, 2, 3, 4, 5 to go. All right. So clearly wave 3, if you've been trending this as a reversal, as I did back then, you're pretty damn great. The market's breaking down. You just let it go. You're reinforcing. You're taking breakout trades. And you're going fully leveraged in here. Wave 3 extended is where you're going to make a maximum amount of profit. This is where you're trading leveraged. How do you play this? So we're still facing the problem of TradingView not updating intraday data. So I'm just going to stop the replay and go straight to the essential. This is how you highlight trend trades. When you're breaking the context brutally, not just a bit, you're really, really brutally breaking. Now, when does trend stops? What are the steps? Okay, so steps 1 is building a range and breaking out of that range, which suggests wave 3 is on the go. When you have that, you should see the context boxes being unfolding one to each other. All right? Clearly, it shouldn't be just a tiny bit. It has to be brutal. The breakdowns has to be brutal. It means that in here, people were fighting bulls and bears, buys and birds, and here we have no bears, we have no bulls. So it's all about bears, and we're going straight line. The trend generally terminates when we have wave 4 pullback. So wave 4 pullback has a technical that goes along with it. Wave 4 always retraces back to the trend channel. So the trend channel, when you're ranging, it's uninteresting. You're always going to break them. So you're going to trade when the market breaks the trend channel. Try to break down, failing, range trade to take. In here, same thing. Try to break, failing, range trade to take. Range trade, range trade. This one, a little bit tricky. The market didn't manage to break, but range trade. Range trade and trend trade. All right? So trend trade is where you use that trend channel just for one thing, highlighting wave 4. This is your second step in a range, to define the maturity. When you're sideways ranging, you're probably just building wave 1, so only speculators will take those trades. Then this is where you trend trade. You cannot buy that market anymore until you terminate the trend. The trend terminates after wave 4 pullback, so you wait. You still don't know. At that point, you're making lower low. You just let it go. You wait for the prices to reach out back to the trend channel. This is generally when you're having the wave 4 ranging that will build, which means you're going to switch to short-term range, which means, oh shit, what the hell is wrong with them? All right, so in wave 4, generally the market will go sideways, trying to break the trend channel as well, meaning ranging. We're back at wave 1. Wave 4 looks like a range, okay? We're early ranging, but we're still generally making new lows, which means after wave 4, and in here it's been lasting freaking long. Look how long it took for that range to go there. All right, so it's been a triangle formation, but back then we didn't know. In your range, you're always trading the first swings because they're obvious. In here, you could have traded this, but obviously not as a buying scenario. You're just waiting here. You could have taken that bearish trade, following the trend, because you're breaking the ranges, boundaries. So it's just as those trades, but you're still trading those one. So this is price you trade. Upon signal, I need to set things real straight in here. I'm not going to take care about signals. In here, I'm just highlighting the prices in which signals will matter. Anything else than those areas is just worthless. All right? Are we clear on that? We have to be. Any other signal in here is none of your fucking concern. So wave 4, meaning you still have wave 5 to go, you just let it go. All right, as long as the range is playing its game, you let it go. You have a trend trade to make in here. Sorry, a range trade to make in here. You can try this one as well. You can try to buy in here. Those two in here as well. If you want to trade the range. But what is that context? All right. In here, for example, if you go on the lower chart time frame, okay, this range in here, you're going to trade the context. So you can take all those trades on the lower time frame. It's going to be range trades. But it's going to be bearish range. So you can trade both sides, but you obviously trade leverage divided by 2 on the bullish side because that range is probably going to be broken by the downside. But it's going to be broken for wave 5 kind of thing of signal. All right, so wave 5 is no trend trade. You don't trade breakouts on wave 5. What you're going to do on wave 5 instead is that you're going to lock on the gains and start to build a reversal range. You're going to reverse, okay? What you're doing in here is what you've done back there, or back here. This was wave 5 profit taking, and you just play it all over again. This is always the same thing. You're going from trends to ranges, ranges to trend. Ranges, you trade the boundaries and the breakdowns, all right? And you're generally ranging between 2 trends. So if you're in a range, go have a look at the higher time frame. You're probably going to have more information about what kind of range this is and how you should money manage in between. In that range, you favor the sellings because you wave 4 kind of ranging. But it's still the same kind of range like that. But in here, you can favor both because this is a wave 5 to 1 range. So in here, you can buy, sell, buy, sell, buy, sell, buy, sell until you trigger the trend. Okay, clear on that? God damn it. I can't stand that shit. Oh, God. Anyway, so it's just that I try to figure out a damn area where to click without having those nasty dots. It's like there's no area on that chart that isn't related to framework, which is absolutely not the case. So, fuck it. Oh, gosh. Right click obviously isn't working either. Oh, damn it. I have to work this out because this is really annoying. All right, here we are. So, wave 5. What do you do on wave 5? Just as I said, you resume range trading. So how do you do range trading in here? You're gonna go playing along. Oh, shit. No way. I'm sorry, really sorry about my language in here, but it's really, really pissing me off. So this is the area you're trading, okay, wave 5, and all you're trading afterwards is waiting for prices to reach out, and you're going to trend trade, you're going to range trade on the lower time frame. So in here, range trade. Probably this one wouldn't have worked well, but you're still trading in here. Anytime the market breaks the trend channel, you're going to try selling this. You fight the ranges, because in ranges you're going to have stupid traders who will want to trend, and you're just going to take their losses. This is how you're going to make gains in ranges, by someone else's stupid decisions. People want trends, but most of the time we're ranging. So they're going to make stupid decisions, and you're going to make money out of their stupid decisions. So in here is where you range trade, in here as well. Yes, everybody will tell you, you know, prices are going down. Why are you trying to buy? Because you do range trade. You don't give a shit about what people think. In here, you try to trade anytime the market breaks. But you're going to trade this in the lower time frame. Remember that you always trade in context, which means those things is where you should trade, but not in the 4-hour chart, in the 30-minute time frame. So in here, your 30-minute time frame, risk managing. And we're going to go through this. We're going to highlight the latest trades we're trading right now in here, because you're going to understand what the hell is at play and why we shouldn't be selling the trend in here. So we've already made in wave 5. Okay, so we're ranging. In here, we're breaking. Anytime we're getting in context is where you should range trade in that time frame. So 4-hour scenarios in here, we play the range scenario. We're in context. We should have waited for price on top of context, so this is where we had the most interesting prices to trade, but the market will sometimes range in trend, which means we're bearish ranging right now, but the answer is ranging. We're ranging, but we're still failing on the context, so this is all the trades you take. So in here, 4-hour chart, obviously you take a buy signal in here, as well as you took a sell signal in here, upon signal only, even though the most attractive prices were on top of this. So when you're selling in here, you're putting a large stop loss because the prices can break through that trend channel, and you're generally waiting for them to do. Same thing goes in here. You're buying, okay, but you put a very large stop losses. Okay, these are the next updates I'll do for you guys in there, and this will be significantly helpful to you. But right now, I just don't want to talk about that. But it's going to help you to manage stop loss. For example, in here, your stop must have been below that price, obviously, because prices could have broken in there. All right, so euro dollar right now. We're real time. What the fuck do you do in here if you got the point? We are range trading. We're exactly doing what we've been doing in here. So in here we do have interesting prices, but you're not trading this with a 4-hour chart. You're going to trade this in the 30-minute chart, because we're trading 30-minute context in here. This trend line in here, this trend channel is the 30-minute context. Last time you had another 30-minute trade is in here, pure and simply. All right, so now let's switch back to our 30-minute chart and highlighting why this range should be bought. Okay, we're bottoming on the range, And I think we're bullish ranging on the euro dollar. So in here, even though how ugly it looks today, everybody will tell you, oh shit, we're bearish trending again on euro dollar. What the hell are you doing? People will try to trend trade in a range, take their fucking losses. All right? I don't say it's going to be that case. I don't know. I never know. But all I say is that in here, a freaking 30-minute signal, I'm in. All right? But when do I unfold momentum? Just right now. Anything that happened before was actually not interesting at all. You don't even have a look at those signals when prices are not in there. So what do you do right now? Profit taking. All right? We're interesting price area. Profit taking structure means you buy in here. When the candle closes, you need to wait for that candle to close because that pattern isn't closing until 7 minutes. When this one closes, you buy with a stop loss according to the profit taking structure, which means large stop losses. All right? But I definitely stand on that. It's a buy call tonight or today on the euro dollar. I don't know how it's going to end, but if this pattern closes like that in 7 fucking minutes, I'm going to buy euro dollar. Future will tell me if I've been right or wrong. All I know is that in here, I'm respecting the freaking damn strategy. Now let's see back in time why we would have taken all the boundaries of that range. Okay? Now let's play that game. Let's see what happened back then in time. And prices we've been highlighting previously. These are all the trades we could have taken. This one, obviously, we should have highlighted this one. I'm sorry I missed it. But obviously, there was another thing in here. Breaking context. In a range, you're buying. Simple as that. Okay? Because once you identify the context, trading is going to be freaking easy. Because you know what prices you want, and you're just going to wait for signals in there. Any other signal is going to be risk management at best, or nothing to care about. 90% of signals will be untradeable because they'll happen into freaking uninteresting price area. Prices area are very narrow price area you will trigger signals onto. So now let's switch to examples. In here, signal, gray. What does that mean? You take it if you want, but that's highly risky. So for example, in here you take the trade, okay? Because you're interesting price area, but very risky. So you take the trade, you put a very large stop loss, okay? And you just let it go. Profit taking is 61%, 76.4. So in here, pretty damn good. Profit taking, no problems. Now, going further, all right? You wait, next trade opportunity. Taking profit, once again, gray signal, not the best of risk managements, but you're trading in context. Second trade, bearish entry, large stop loss again. What do? You trigger same thing, 61%, 76.4. Oh gosh, two times profit taken. You haven't been stopped, so you're not doubling down by selling those prices, but in here, pretty damn fucking exit, so obviously in here you can double down. Okay, you're not doubling down if you don't have better signals. Okay, taking profit, very unreliable kind of signal, large stop losses, or you just forget about them, you just don't even trade them. All right, in here, exit, obviously you're putting a little bit more money in there, you just narrow the stop loss. Exit is a lot better to trade, so you put down the stop loss, you put an additional trade in here, still targeting the same areas, 61%, 76% targets, right in here, double profit taking. And what do you do in here? Goddamn, take profit once again. So you're buying in here and reversing. Same thing goes as well. Large stop loss because profit taking structure, not that best. And you're targeting what? The same fucking 61% and 76.4. And in here you haven't been taking profit, but barely have been. All right? But you've been profit taking number one. So taking profit number one, trade at break even. So you've been taken down by the market right in here. It took your stop loss, but you've already been profit taking number one and been close to profit taking number two. And actually, let's set things straight. Now Fibonacci's have been updating. So back then, Fibonacci, I bet we've been profit taken out there. Did we? No, we've been just profit taking number one. All right, so it's just in here 61%, so sorry about that, the Fibonacci level weren't updating. So they've been updated because we've made new lows. Okay, so back then we had no profit taking in here. Shit, I can't catch that. So profit taking number 1 would have been here at 61%. Profit taking number 2 would have been 76.4. So in here you would have just been profit taking number 1, but perfectly taken. And now the market is taking down your stop loss. So in here you failed to get profit taking number 2. All right, there is obviously a possible trade in here, but without signal. So in here you're not trading bearish, but there was a tiny thing. It's not good enough because the price just tested the context in here and reversed. But there was an interesting price area in here if the prices went to trigger a pattern, which they didn't. So why do we buy in here? Simply because we're following the DAME strategy. How mature is that thing? Simply, we're going to zoom out. And how many times have we been swinging into that range? So we're going back to 4 hours to have a better sight. Okay, how many times have we been reaching out to the trend channel? Let's let time for the indicator to reverse. So 1, 2, 3, 4 swings. So it's the last time we're buying in here. All right, I said no more than 4 times. So it's the last time you're trying the range trades in here. Last time. Next time probably going to be triggering a trend. Are we clear on that? It isn't that complicated. You're always switching from ranging to trending context. You never trade trends reversal aggressively. You don't go from bearish trend to bullish trend. You always have to reverse. Before going from bullish to bearish, you're going to have to terminate wave 5, which looks like a range, to build wave 1, which looks like a range, to reverse a trend. Are we clear on that? This is why it's taking us so long in here to get the fuck reversing the euro dollar. But in here, I strongly suggest we've been ranging more than enough. We're probably building a reverse trend. So this price we're having right now on the euro dollar is probably one of the most interesting prices we had in months. And yet, everybody sees that as strongly bearish. So how do you manage that trade? Obviously, you're buying, but you're buying with a profit-taking risk management, which means, once again, large stop loss has to be put. This one is real time. So you're going to say, okay, easy saying what's been happening in the past. So future will tell if I was right or fucking wrong. Okay, this one is aggressive. We're really breaking it down. But I stand on this. It's a freaking buy signal to me in just 1 minute from now. All right? So I'm going to take this trade. I'm going to terminate the video right in here. In 1 minute, if the signal still stays in, I'm going to take that trade, and future will tell you and tell me as well if this was a good or by choice. I don't really give a shit. All I care about is in here, the strategy has been respected. This is a clear and clean 30-minute signal. So once that trade is triggered, I'm not considering watching 1 hour or 15 minutes. All the time frames next to this is none of my concern. Okay, when you take a trade on a time frame, the closed time frames, you just delete them. You just don't even watch them, all right? The next thing is that from 30 minutes, at least 4 hours is visible. You can have a look at 4 hours, but 1 hour, 2 hours, you just don't give a shit about them. 15 minutes, you don't. 5 minutes, you can eventually. You need to have at least 6 times the context you're trading, okay? So 6 seconds to go. Signal is still there. All right, that's a trade. I'm going to closing that video. I'm going to be taking that trade. And obviously, the risk management has to be light. So very light position sizing, very broad stop loss in here because we're just having a profit-taking structure. Bye, guys. I hope you learned quite something today, and that you're going to be a little bit better at identifying trends and ranges and identifying their maturity. Just to sum up information. So I'm going to pause and take the trade first. All right, trade's been taken, leverage 0.5, so half a leverage. God damn it. We're still range trading and late range trading. So if this one doesn't trigger a trend, at least this one has the high potential to trigger a trend. But remember the thing, we never know, which means there is always uncertainty for me to be trading against the trend. So if I'm wrong, stop loss. No problems. I don't give a shit. I'm not here to prove right or wrong. All I care is managing my risk, and generally it tends to be proving me more right than wrong. And when I get to right, I get far more than what I lose when I'm wrong, because most of the time I just lose nothing when I'm wrong. Okay, that's simple as that. So apply the defined money management, the trade, when the signal appears on the interesting price area only. That's all you should give a shit about. Okay, look at those signals. If you say, oh, we were oversold, who gives a shit? Those prices doesn't really matter. So the signals that happen in them are just for dumps to care about. So please remember that. If you're struggling identifying context, if you put yourself in jeopardy watching and trying to identify prices because of signals, just hide those signals. Focus on the essential. Step 1 is coming on top of everything. This is why it's been calling step 1. You don't have a look at signals if they occur into uninteresting prices. Okay? And then I've made that previous video, which is framework number 2, managing the risks. So now we're just going to review that video just to terminate this. Now what's the next step? I've been highlighting my interesting price area. I've been going into the time frame in which this is a context, so in here. And another question, why shouldn't I take the trade in the 4-hour charts? I should do, right? Maybe that's a question you may wonder. Why don't I? It's pure and simple. If you don't get to that answer, you really, really have to work this out. I don't take that in a 4-hour because I always need to trade in context. Remember that. This is really one of the core rules of the strategy. If you trade out of contexts, then it's not possible. And remember, this is multi-time frame. So when you are identifying the range on the 4-hour chart, you don't trade the trend channel. What is the rule? What's the only time you trade with the trend channel? There's only one time in that video I gave you a signal to trade on the local time frame on the trend channel. If you got the right answer just right now, you're really good. You're really, really, really good. I'm going to just scroll back in time to just remind it to you, only time I've been doing this is in here. So in here, you can trigger up on 4-hour charts only and trading out of context, simply because in here you're trading wave 4 of a trend. This is the only time this trend channel will be usable. All right? Any other time is just things to break. So the trend channel is none of your concern. All you can do is to go to the lowest time frame and search for signals at the trend channel's boundaries. All right? So if you get that, you're really good. So in here, when you're opening that 4-hour chart, you know that there's nothing to do in here. You're not trading context. But I've made that multi-time frame thing to help you identifying opportunities rapidly. In here, no opportunity, but we do have one on the lowest time frames. The trend channel in here is the 30-minute context. So we switch 30 minutes in which we're trading range context and we're at range boundary. So in here you can apply the range strategy. In here you're searching for signals just as you would have been in here, and all the prices we've been highlighting previously. All those things are trades you take. This is how you highlight. If you're searching for signals before doing that job, you're just doing it all wrong. I've been clear on that since the first day. Step 1 is step 1. You don't go step 2 or 3. You first get to fucking do this. Highlighting the context. What is that context? How mature it is, because it's going to help you into money management. As I said, late trending. When you're trending wave 4, you're not going to put leveraged on wave 4. Wave 4 is just a final reinforcement heading into wave 5. When you get wave 5, you get the hell out, you take all your gains, and you switch to range trading. If this can help you, take all the charts you have and use that tool, okay? And you just write down the context and you update that thing in real time. I really suggest you do that. This is a really good clue because it's going to save you some time. So let's take, yes, confidence index, for example. So you're going to say in here what the context is right now, okay? We're range. That's the answer to question number 1. But we do have question number 2, all right? What is the maturity of that range? All right? Oh, shit. So we're range and we're late range for swings already. Okay? With those 2 questions, you can move on to step 2, which is waiting for prices that matters. In here, that's already the case. Step 3, waiting for signal. We can move to step 3. This is why I'm triggering the trade. Step 4 is money management, so profit-taking kind of trade, large stop loss, everything we already talked about. This is respecting the strategy, just right in here. And we even got a live trade to trigger. So that's the best ever I could make today to help you guys getting the best out of framework. And as you've seen, have we been using momentum and sine wave along that video? Yes, but at the end, first step must be done just out of price technicals. All right? Bye guys, hope you're gonna have a great weekend. It's probably one of the latest updates of that year, so if we don't catch up again, I also wish you a happy ending of that year, and we're obviously gonna catch up one more time since then, I bet. So just see you soon, and don't forget to enjoy your friends and families. That's really the most important. Trading comes after. So if you don't have time for this, no worries. The video is not going to disappear. So you just put them into favorites or just save the tab on your browser and you watch out in 2019. Nothing will change by then. All right? This is just helping you guys getting the best of indicators. No magical. It's going to require practicing, a lot of work. You're going to make mistakes, obviously, but it's by slowly getting better that you're going to get yourself a trader. You're going to still make mistakes. That's normal. Don't blame yourself. Anytime you make a mistake, go find some support into Discord. Other users will help you identifying if you've done something wrong or just not. Because remember that, it's always about statistical advantage in here. Doesn't mean you're going to be right every time. Sometimes you'll just do everything right, but the market will choose to go on the opposite side. It's just statistics. Every coin has 2 faces, and when you're throwing that coin, can very well end up any of those 2 faces. That's what we're facing when we're trading. It's the Schrodinger's cat box. You never know what's going to happen. What we do in here is no magical. We're just trying to assess and trade with decent risk limitation. But to do that, you need to apply the strategy by its own rules. Step 1, step 2, step 3, step 4. And that's it. And step 5, that we can eventually call a step 5, which is risk management ongoing. And by the way, I forgot about this, so we're going to terminate in here. What's the next step after that trade? What do I do? Do I stay there and watch for the live pricings? No, I don't. I told you not to do this. If you're watching a chart for more than 5 minutes, it means there is a problem. You shouldn't be doing that. 5 minutes is more than enough to highlight interesting prices by those rules. More than 5 minutes, problem. So in here, I'm doing this because we talk. So let's say, okay, I just triggered that trade. So let me just delete the drawing tools once again. Oh shit, it's really lagging recently. I don't know what the hell they're doing in TradingView, but it really is a problem. And a lot of people are having the same feedbacks recently. So we've been buying, all right? To be exact, I've been buying at this candle close. So this is my buying entry with a profit-taking risk management. So stop loss is far from now. To be honest, no stop loss to me. I don't tell the market maker where my stop losses are, but I do have invalidation level. So I'm going to use this invalidation. I'm going to put the alert right in front of you. So I'm just going to do what I do on a day-to-day basis when I trigger a trade. It's just pretty damn good that we had the opportunity to trigger one right in here. So I'm going to need SMS in here because that's forex. Invalidation of range trade. All right. Means in here, if we're invalidating, means probably the euro dollar is bearish trending, and in that perspective, I'll just get the hell out. I've been trading late ranging context, which means a tiny position sizing in here. As I said, I'm leverage 0.5. So if trading view just stops freezing, all right. Oh gosh. And I have hell of a computer. I don't have a slow shit. So the stop sizing, so the first invalidation alert is 0.5%. I've been trading half leverage, which means if we go in here and I take a loss, it's going to cost me 0.25% of my capital, which is absolutely nothing. But I wouldn't put more money in here than that, simply because I don't want to have more money. I already have euro-dollar trades, so it's just a reinforcement I'm taking today with a defined risk management, and it's more on purpose because we've been talking about that, so obviously I'm taking the trade. So in here, buying signal, what's the next step? First thing, put an alert on my invalidation level, but you guys put a stop loss at the market, okay? If you're beginning, you don't even gambling or talking about that, stop loss obviously necessary for whoever is less than a year or two at trading. Simple as that, because you're gonna, otherwise you're just gonna move the stop losses or moving into denial kind of trades. I don't. I mean, I'm a professional, so I know what I'm doing. When invalidation is triggered, I know if my stop loss has to be triggered or not. I know where to move my stop loss if I want to move it, but simple as that, all right? You don't know how to trade those shaded grays, so you do put a damn market stop loss. All right? Anyway, moving this. Next step, next alert I'm triggering in here. Depends on how aggressive I am. First validation, reaching out to the scalping level in here. It's going to be management for short-term traders. Not going to do that. Next validation, breaking through 50% of the trend channel. It's going to be a good validation. All right? So I think let's do that. It's going to be the first validation to me, but we're profit taking. The stop loss is pretty damn far. So I would say in here, not to be alerted too early for no reason, I would put the alert on the trend channel. Remember the video we've made on how to risk manage the open trades a few days from now. So use that video, and if you got it right, you've got 3 levels to manage the risk. Scalp for very aggressive trader, 50% for balanced trader, and this for low risk trader. So I'll do using this because it's a low risk trade with a profit taking structure, and I use that to trigger alert. Oh gosh. So it's going to be not euro dollar. Oh yes, euro dollar. I want it to cross up the trend channel. Framework. I'm going to use trend resistance. It's going to be only once. I don't give a shit about closing the candle. I just want the candle to touch the trend channel. That will give me sense of a validation that the euro dollar wants to reverse. Okay, so in here, when I'm reaching out to this, what am I going to do next? If this alert's triggered, right now, Schrodinger's cat box. I don't know what the fuck is going to happen. Either I'm going to be triggered invalidation alert or validation alert. Anything that happens in between, goddamn black box. Okay, you just don't have a look at those prices. They no longer matter to you. Anything that happens in there is a damn black box. All right, so either you do it the right way, you just don't look at that chart as long as it doesn't trigger one of those 2 alerts, and if you can stand watching that chart, you put a damn black box. Anything in there, not interesting. All right? I'm not going to do this myself. I know how to handle patience. So, all right, now I'm just waiting for the binary choice, validation, invalidation. Simple as that. All right? When we get to validation, I will closely watch out for signals. If I do have bearish signals at the trend channel, I'll eventually do some risk management and multiple options. I can rise the stop loss or reduce the stop loss sizing or partial profit taking or pay for my stop loss. Many possible options. No good or bad answer in here. It depends on how aggressive you are. All right? But that's how you do trade. You highlight interesting price area, you wait for a signal to occur in them. If the signal shows up, you take a trade according to the risk management of the triggering pattern, and you put the alerts for validation. In validation, you just let go with that trade. All right? Now, what are the targets of that trade? We've been clear on that. It's late ranging. So, first target is going to be 61% retracement. In here, for target. So, in here, you obviously have to profit take at this point, which means you can take 25, 50%. It's up to you. Normally, in a range, you do this. Profit taking 1, profit taking number 2. All right? Now, I'm just going to let you a few seconds of reflection. Why am I not going to take profit taking number 2 in here? If you got the answer, damn great. You can really congratulate yourself. Means you're really good at understanding my psychology and my perspective in trading and my strategy. Why don't I take profit taking number 2 in here? Because we said late ranging. We have high probability of trending at that stage, and I absolutely want to be on board. I have a bullish bias on euro-dollar on higher time frames, which means in here, obviously I'm going to lock on the gains and reduce my risk, but I'm going to keep an open trade in here for trend, because I think we're going to go way higher than that in terms of prices, and obviously I just don't want to limit my gains by profit taking everything at 1.14. I want to have an open trade for further gains. That's all, guys. I wish you guys a good day. I hope you learned quite a lesson, and we even managed to take a live trade.